All right, it's Monday, July 1st. This is an end of the day SPY recap, first day of the month. Today, on the daily chart, we get a two down, bit of a hammer looking bar. It's still a closed red, but we came to the bottom of a range that we identified. It couldn't break through at the moment. It might have this hammer look to go up. However, you could look at the chart and see that if we do kind of get the actionable signal, two down, two up tomorrow, it really has to get through the midpoint of that tail to feel comfortable that you're going to try to break out of the top of the range. So not only do you have the tail to get through, you have the top of a range where it sold off pretty strong yesterday or last week. So it's one of those things where, definitely it's an actionable signal to the upside, and you go with it and see how price action, unfolds to try to break through the top of the range. And if not, then it could be a good failure signal to start lower and try to break out of the bottom of the range again. We have the reference point of the open here, which is now the new open of the week and the month. And if we head above, as long as we're above there, we'll stay green and biased to the upside. If we do start up though and fail and then come back down through that opening, especially after a failure to reach a target in some form, then get ready to, play to the short side. So, it's just a matter of whatever price action wants to do. It's tricky. We're still in the middle of a big range that has been identified now coming on the third week in a row. We try to test the bottom, and that was the context. We know that we have to, we're in a big uptrend overall, and I can look at them, overall. We had the hammer bar from last week. I mean, a shooter bar, I'm sorry. So you're kind of expecting that to head lower, and I still sense that should develop here, but like last week, we kind of looked at that bar and thought maybe we head lower, and the more days went by and we didn't get there, the more we were going to test higher. So it's still early in the week. We'll see, what develops. Either we go immediately lower tomorrow and get the two down week, either we start up and fail pretty quickly and then get a two down week, or it's just a very strong market that's just pausing here and continues higher. So at least we know the context and the reference points and everything going forward. Is actionable signal to the upside. We'll see where the pre-market range is. We'll see how price opens. That'll be a judge as to whether we might be trying to go up or not, and we'll go from there. Today, again, out of the gates, we had the pre-market range between the blue lines. First bar was red and heading lower. We were kind of expecting lower, so it was a good trade here to buy some puts or get short on bar number two. I was aggressively getting short here near the open, just anticipating this, but that was, you could have been more conservative and waited. Either way, it came all the way down, took out the pre-market lows, had a little pause there, which is expected, but then eventually got to yesterday's low. So it was a very nice morning trade. Then as you're watching price action, we kind of consolidated very big in here. We tried to go down again. We took out the lows one more time. Then we came up, and at that point we got red. And then right in here, it just showed you you're not getting that secondary move early in the session down to test the lows again. You already tested the lows of day once. You came up. It wasn't necessarily a buy signal, although, again, not surprising that it then tried to work its way up towards these highs again, but never quite got there. At the very end of the day, it tried to make a push up there, took out some stops, and then sold off a little. So we'll just have to see what happens tomorrow. But it was a good opening trade to the downside. You're at a key inflection point at the bottom of this range, so you got to be aware of that. And that's why, you scale out if you want, or take profits down there, or at the worst, do no worse than break even on that trade. And then price action kind of said you were kind of failing at the bottom, but, you don't know if it's going to be a big push up or not, or it's just a temporary pause. So that's why all this price action for the rest of the day was uncertain as to what was really going to develop. You had the downward bias, but nevertheless, you failed there. And then, it's too early for the upward bias to form, which kind of, you want to see how things close. And it's a bit of a hammer bar, but it's not, it's a hammer bar right in the middle of a big range. And that's why, tough to say what that really means in terms of follow through to the upside as well. So we'll just see what happens tomorrow. And for the rest of the week, it's a little tricky environment, but, again, not getting hurt here if you're kind of using this context of a big trading range and using the opening price action and, managing the trade properly. So while not great, strong directional movement, There's enough volatility to do pretty well on basic type trades. And at some point, like I said, we're going to figure out what's really developing here. Is this just 3 weeks of pausing to head a lot higher on another push up, or is it going to be an eventual pullback, which number one will probably give you good downside action, and then number two will set up for a nice buy signal in line with the uptrend again eventually as well, if we get a 2 down week. So that's kind of what we're judging here. It's almost like 3 weeks, third week in a row that we're inside. You can see that, so that you just got to know the environment, and your trading plan hopefully accounts for that in some form. So we'll see what happens tomorrow. This could be a 2 down, 2 up. We'll see what happens in terms of whatever develops at the open relative to the context of this big trading range that we're currently in.